What's going on, everybody? Welcome back to another live episode here on the Multifamily Wealth Podcast. I've got Will Peck, broker, New Hampshire multifamily, really active, been in the business for a long time. We've done a few deals together.
Yeah.
But for those who don't know you, who aren't involved in the New Hampshire multifamily scene, share how you got into real estate and how you found the business.
Yeah, was lucky enough to be exposed to real estate at a young age. I grew up in Maine. I have a brother, Sam, who's also a broker in the business. We both work at Horvath Tremblay, which is a regional firm, national firm, all across the East Coast, as far west as Chicago. My father and mother were developers in Maine. They're both attorneys by trade, but developed real estate up at Sugarloaf, which is a ski resort, Rangeley Lake, a building in Portland. So was exposed to it from a development standpoint at a young age and always had interest in it. And then, just got into it actually right out of college. This was the first job I took out of college and
Got right into it.
yeah, very, very lucky. It's common. A lot of brokers are very young. Like we start out, it's a young man's game early on. And we have kids coming in. I shouldn't say kids. We have young people coming in right now that are,
adults.
22 years old, just starting with our firm. So that was me. When I started, I graduated college in 2018 and jumped right into the business and started from there.
Why brokerage? Because I think there's any number of avenues into the real estate industry. I think it takes a certain personality type to get into brokerage, generally speaking, as I'm sure you'd agree. But what drew you to that side of the business specifically?
Yeah, so I was lucky to be exposed to a couple different sides of the business. When I was, a young person, I interned at Housing, which is a LIHTC, low-income housing development firm up in Portland, Maine. And then I was lucky enough to intern at CBRE Boulis at the time. They're the Boulis company now up in Portland, Maine, before my senior year of college. And I think what pushed me towards brokerage in general was just competition. I enjoyed the competitive nature of the business, competing for deals, competing for client relationships. I think that pushed me. Grew up playing sports, played sports in college, played football down at Dickinson College. And I think that competition put me towards that brokerage lane.
Yeah.
It's
the definition of you're really just only getting out what you put in. I mean, especially early too. You just got to run into a wall 100 times before you gain any traction or start building your business. Multifamily specifically, was that always the goal or did you start somewhere else?
So that was the goal. I had interest in apartment building sales before I got into my job at Horvath Tremblay. I interviewed all over the place at all the big firms we know, the CBREs, the JLLs. Those positions that were offered to me at those types of companies were more of an analyst role to start and then work your way into a brokerage role, which I wanted to just jump. I wanted to do deals. I wanted to meet people like yourself and transact. So that pushed me towards Horvath Tremblay as opposed to other firms that I interviewed with. But what was offered to me, luckily, made an impression with the head of our multifamily team and the guys that were on the team at the time, and was offered a job on the multifamily team to sell apartment buildings in New Hampshire or on the retail team to sell triple net lease assets in Alabama. So to me, it was a pretty easy decision because I had already previous interest in apartment buildings. And that was a quick for apartment buildings for me.
Well, that's it's also just, at least for me, and when I was coming out of college or late college, it's just easier to understand multifamily early. It's a much more digestible asset class within real estate versus, triple net leases in Alabama or in the South or wherever is that's not fun. It's not exciting. It's not relatable. You know what I mean? So it's that's just, you're not going to be as excited when you wake up in the morning, I'd imagine, which is probably a dynamic there too.
Yeah. And I thought the other thing that drew me away from that, other than the Alabama thing, was just the in-person aspect of our business and how regional it is, where we have a very, very successful triple net team at our firm and 1031 team that sources buyers all over the country, sources sellers all over the country, and they do it from their desk, right? They meet people at, ICSC, meetings like that, but, me and you get to meet when we go walk a property or tour an asset. And I think that in-person time was something I was also trying to get as well.
It is really different. Yeah. Upside, you're not crawling around old Manchester basements, but yeah, downside is it's a much more, it's my 2 cents, just more boring, but that's my take on that. But for some people that's probably a little bit more exciting.
Sure.
But talk about, so you get into the business out of college, you are working multifamily. I'm sure I mean, maybe this is a question worth asking too. Like, why New Hampshire? Like, you're from Maine originally. I believe you moved to Boston, right? To college. So, like, how did New Hampshire end up being the market focus?
So our team was expanding. Our firm started about a year and a half before I came on. The founders of Horvath Tremblay founded the Marcus and Millichap Boston office, and then broke off and started H&T, and continued to grow the multifamily team regionally. And luckily for me, New Hampshire was available and they were looking for the right fit for it. I knew New Hampshire well enough growing up in the area, in Maine, spend time in New Hampshire, knew it to a degree, but they were just looking for someone to go pound the pavement. And I was willing to do that, and, couldn't have asked for a better market to trade in. Very, very lucky.
You got into it right at the, like right before COVID, right?
Yep.
That's when a lot of that Boston capital, a lot of just dollars from Boston, individuals from Boston started migrating north, and even farther south, like getting down to like Connecticut and New York. It's funny. Like I remember the days of 2017, 18 paying 50, 60 grand a door in Manchester. And it's like, the old heads, all the long-term guys there were like thinking that was the market peak, coming up on 100 grand a door average buying stuff in Manchester. And they were all getting out. And then that was just the beginning of what really became an accelerant post-COVID, with a lot of folks just physically moving from Mass up to New Hampshire, all the capital moving up there. But before we get into all that too, I think maybe a helpful topic of discussion, especially for like the young brokers who might be listening to this, or even like the younger investors who want to go out there and try to pound the pavement to find deals direct to seller, is you use the term pound the pavement up in New Hampshire. You're kind of launching that market. Like, define what that meant at the time, and like how you start, like first couple of years. I'm sure it's a lot of calls, a lot of business development. What were you doing to actually build that book of business, I should say, early?
I mean, I think similar to what you did to start, right? I mean, I started some of our territory. New Hampshire was stripped back by the team prior to me beginning, but a lot of it was not. So my first, I want to say 7 or 8 months in the business was just figuring out who owned what in what town, getting the grand lists, figuring out, okay, this guy owns X, Y, and Z and these 5 markets, yada, yada, yada. Building that database was the first thing. And that was obviously crucial to make sure that data was accurate. And then finding numbers for these people and actively calling and trying to get in touch with people like yourself who own real estate within the state in the markets that I was actively calling through at that time. But I mean, brokerage is a pretty simple business, especially early on. It really is just
a contact sport.
We're tracking, how many calls you make a day, how many calls you make a week. And you can really boil it down early on to, okay, I made 400 calls this week. That led to 2 proposals, which led to 1 listing agreement, and which led to a sale. So, early on, it was a lot of, front end, reach out, meet people, get in front of people, use the leverage that we had regionally. But it was a lot of just outreach, and it still is. And that's, the fundamentals of brokerage is really just getting in touch with people and making sure that your name is known and that the product that you're selling is vastly understood and out there in the market.
Now, it doesn't get easier, so I don't want to imply that it does get easier, but it kind of does get a little easier at some point, right? So I'm interested in learning, like, at what point in the growth of the brokerage business, like, did it start to get a little easier, or was there like an inflection point, a key event that started to, okay, now I don't have to grind as hard for the business on a day-to-day basis, and I
actually think I'm grinding harder today, believe it or not, and that's I think that's the fundamental with everything. I mean, everyone tells you got to work hard in whatever you do. I can definitely say that is the case with real estate brokerage, at least commercial real estate brokerage. You truly get what you put in. It's an eat what you kill sport, so you have to put in the time and energy every single day, because every single day is different. I would say the beginning is very difficult in a different way, meaning there's more long nights where you're like, I don't have the activity I want to have. I'm not getting in touch with the right people. This guy got this deal to list. This guy got this deal to list. Like, what do I have to do to attract? That's right. And every broker, and I tell every young guy who gets in the business at our firm, the first year and a half, 2 years sometimes for people, is very thin financially, and it's a difficult position to be in when, you know, we all graduated with friends that got into, you know, random sales jobs or basic, you know, entry-level jobs, and they're making okay money, and, you know, they're having a normal 9 to 5, and they're going out on the weekend, and, you know, I'm in the office on Saturday morning stripping through properties, and I have no money to my name. It's a tough period mentally, and it's a grind to get through that. And I think some people, unfortunately, wash out of the business before they get past that hurdle.
Yeah.
Because that's a huge hurdle for everyone who enters the business. No one, I haven't seen it yet. The guy who comes in is like, I'm different. Everyone thinks that because you have to be a little delusional to get into it.
You do.
But I haven't seen the guy yet who's like, I'm going to get it in 6 months. Like, I'm going to, you know, be one of the top guys in the firm within a year and a half. It doesn't work that way.
Yeah. Well, I mean, it's like relationships compound over time, right? So it's like the first year, like people don't even really know you. Right? Even if you get a couple listings, like it's going to take you probably 6 months to get them, and they're not getting a paycheck for 90 days, right? Yep. So it's like, it's actually kind of like just mathematically impossible, frankly, to really make it in the first 12, just based on the life cycle of a real estate transaction. So yeah, what's tough is, and I'm sure you've seen dozens and dozens of brokers directly, whether it's just, you know, at other brokerage firms or just people, you know, in your own network. But like, from my seat as someone who's seen a lot of, you know, I've received the calls from the brokers, like, would love to give you a value on 123 Main Street. And just seeing the sheer volume of folks that cycle in and out, it's tough because it's like, once you get to like year 2 or 3, if you have been putting in the work up to that point, you know, it's like you're starting to get to that equilibrium on the graph where it shoots because you're starting to finally plant those deep seeds. So yeah, I think that is the right messaging, where it's like, you have to, and it's not like, oh yeah, no, I know I probably won't make money in 2 years. It's like, no, you like probably really won't make any money.
No, you have
just kind of why you have to be a younger guy or girl to get into it.
Spot on. Like, it's very difficult for someone to come from, you know, a 40-year-old guy who's made, you know, decent living.
Kids.
Right. Like that, it's a big transition. Oh, excuse me, I hit the mic. But yeah, it's very difficult early on. And I think that 3-ish year, to get back to your point, third year, fourth year, if you've done what you need to do, laid the pavement, because like you said, this is the ultimate long game. This is real estate, right? It's a relationship, long game business. Once you get to that third, fourth year, if you're doing all the right things and you're talking to the right people and you're genuinely listening to your clients, trying to put yourself in their shoes, and being an advisor to them, I think that's one of the biggest misconceptions that brokers have. Because, and you know this, we've had plenty of conversations like this. I want to be an advisor to a client. I don't want to be the broker who you call me and you're like, hey, you know, Will, do you want to sell X, Y, and Z for this price? And I'm just like, hell yeah, like, let's sell it. Like, okay, well, let's take a step back. Why are you even considering selling the asset? Like, what is the motivation behind that? And then, is the pricing that you have realistic for the market? I think I've told plenty of people to not sell. I tell people to not sell every week. And I think that's a difference when you're younger in the business and all you're trying to get is listings, and you're just, you know, trying to take whatever you can get, but that doesn't really service the client or service the market or yourself in the long run.
Yeah, and I think, I don't know if you've seen this video. It's like, once a month I'm recommended this on YouTube randomly. It's like some dude from like Goldman Sachs giving like a presentation on like how to be a good like wealth advisor or something like that. I'm forgetting his specific job title, but it's literally, it's like got millions of views, and it's some dude from Goldman Sachs talking to like a college, and he's like, if I want to boil down a 40-minute video that one time I watched the whole thing through because I'm like, I've been recommended this so many times I gotta watch it. But he was basically like, yes, you're a wealth advisor, financial advisor, whatever it is, and like you can provide insight to a client on the very specific, you know, topic or function you've been engaged to do. But like the best ones are providing their opinions on other things and providing referrals to other folks, and are expanding the scope above and beyond kind of what the minimum expected level of service would be. So like the version of that on the brokerage side is, you know, hey, what is you know, if I'm a investor who's trying to build a relationship with the broker, or I should say reverse of a broker trying to build a relationship with an investor, what I would want to do is, hey, you know, just a heads up that this guy sold this building for X and that's the price, and he was getting these rents, and This guy is selling this building and probably going to try to entitle some land, and like trying to provide value above and beyond just like, hey, I can give you, a proposal
100%.
on that particular building, right?
100%.
And I think that's and for me, like we're raising money to do deals, and like I try to provide that kind of level of service to the folks who are raising money from, because while I'm just if I'm going to just really diminish what we do, it's like I'm just a vendor who you're using to get your money into real estate and private placements. But I could probably provide some insight on, okay, like you're thinking about buying a house with your wife, maybe you shouldn't, based on some of the things that we're doing together. Or, hey, maybe you should think about rolling some of those funds into a self-directed retirement account instead of investing directly with me. You're investing through the retirement account, et cetera. And I think that's kind of a mental approach to all of it that I would imagine you'd agree with.
Absolutely. Absolutely. I mean, trying to understand, okay, if you're considering selling, what's the motivation for it? Yeah. What are you going to do with the money? That's the second question I would ask. Because if you don't have a plan with what you're doing with the proceeds, I don't think you're a seller. Because, hey, if you own this building for 20 something years and you're going to get absolutely whacked by Uncle Sam on a capital gains tax, okay, do you know what 1031 exchange is? Do you know the options you have to protect that money? And then just trying to understand where they want to go long term, because this is the long term game. Okay, well, are we being short sighted with this thought process? Why now? Why not 5 years? Why not 10 years? Like, what is the ultimate goal for you to try to understand the client better? And that's just putting yourself in their shoes and genuinely trying to advise them on, what my opinion is on what I'm seeing from the outside looking in, and genuinely listening to them to try to understand that.
Yeah. And it's downstream of being relationship focused instead of transaction focused, 100%. Which is like, I need a commission now because I'm struggling to pay my bills, is an entirely different situation to be in as a broker, as anybody who's doing deals, mortgage broker, real estate broker, whatever, versus like I have a healthy foundation. Like I can make, recommendations to folks with the long term in mind. It's a totally different setup. That said, I do want to get to New Hampshire multifamily itself and talk about what you're seeing in the marketplace. And I think from a current event standpoint, like we're recording this June 10th, I believe is today. This will be up by the end of June. So comments we make here, for the audience, knowledge is still going to be pretty relevant. But New Hampshire's in an interesting spot where we're downstream from a lot of demand in Boston. We're downstream from some impending landlord-tenant legislation, whether it's rent control or even outside of the rent control component of what's going on in Mass. There's just a continual, there's just more and more issues from a property management standpoint, I think, for folks who are investing in Mass, just on a day-to-day basis, especially in C-class. Yes. And people are just moving to New Hampshire, just fundamental population growth. So we've got a lot more investor demand, but we also have these macro things of we keep, interest rates keep going up and the market's not as great. So heading into Q2 of 2026, like what are you seeing in New Hampshire right now? And I'll define that a little bit more in terms of like activity, like buying, selling activity, cap rates. Do you feel like cap rates are increasing, decreasing, and then anything else that you find relevant there?
Yeah, I would say, well said in general. I would say the top line comment on New Hampshire in general is it continues to be the most landlord friendly state to invest in New England. The fundamentals, like you mentioned, where rents are continuing to stay pretty steady. I think obviously we're not seeing the accelerated rent growth like we saw in 21, 22. But
unfortunately not. I know. But fortunately for society.
Correct. But I think the cap rate comment is worth mentioning, because I think we are seeing slight, flex in cap rate. I think we are generally seeing it pop a bit. And the biggest thing I would attribute that to is just the continued level of the debt market. And I think that the debt market is, I haven't looked at the 10-year this morning, but I think we're probably hovering around a 4.5, 4.55.
Well, inflation numbers came out this morning. I don't know if you saw that there. They increased. So we're not going anywhere other than straight or up until the end of the year.
Right. So I think at least regionally, a lot of investors have been expecting, and I've heard it from a ton of people, survive till 25. We're coming down in 20, whatever the terms are, whatever they're saying. I've been operating under the assumption that this is the debt market that we're going to be in forever. Not saying that's actually going to be forever, but how I'm underwriting deals is, does it make sense in the market today? And on my pro forma evaluation, does it make sense if the debt is the exact same as it is today? So I am seeing cap rates pop a bit, generally speaking, and it's so asset specific.
Yeah, so I want to quickly interrupt because I know you probably have more, but I just want to dive on that because I think that's like the biggest kind of discussion point as it relates to what's going on in the market. So let's say we're in Manchester, New Hampshire. For those who aren't from New England, biggest city in New Hampshire, 100 some odd thousand people, most trades. You got a B class, 60s, 70s, 80s, whatever it is, property. It's 20, 30 units. Light value add, like it's kind of a down the middle of the fairway type of deal. Like from a cap rate standpoint, you know, I'm not holding you to anything, just very generally speaking, right? You're saying you're seeing them pop a little bit. You know, what might that have traded at a year ago? What do you think you list something like that for now? Where does it trade at now?
Yeah, I think it would be at a similar cap rate as it is a year ago, just because if it's 30, 40 units, the scale is enough to attract people regionally. And like you touched on, there's a lot going on in Massachusetts that's pushing more capital up to New Hampshire and in Maine and in, you know, Connecticut, New York, Rhode Island. But I would say the biggest cap rate adjustments I've actually seen are on smaller deals. Say it's a 10 unit building. I think that you're seeing that cap rate pop closer to, you want to be closer to probably an 8 cap going in. Maybe a high 7 if there's upside. But the problem with those smaller deals is that the debt market affects those deals more, in my opinion, just because of the investor pool for those may be a little less sophisticated than someone like yourself, who's going to go through a Pat Brady, who I know you just had on the show, who's a phenomenal mortgage broker regionally. And Pat's going to go get the best debt in the market, right? So a mom and pop operator who may own 20, 30 units, they might just go through their same bank that they've been dealing with for 20 years. And that bank might quote them at a rate that's, 50, maybe even 75 bips higher than where they could get if they go shop it with a professional like Pat. And that delta on where the cap rate and your debt is needs to at least be covered. It's very difficult right now to sell negatively leveraged deals. Not as difficult when debt was, you're getting interest rates in the 3s or 4s. It's a lot easier pitch. Like, hey, you're easily going to be able to push rents here, and you're going to cover this debt. It's a lot harder when, that deal is very, very thin going in. So I think that's one of the most difficult things I have with pricing today is trying to get deals that aren't negatively leveraged out of the chute. And that's push pricing down on assets that have below market rents. I think that's a huge, huge, issue that's happening with those types of assets.
Yeah, and I think to your point regarding the smaller deals versus bigger, I mean, not that a 30 unit deal is a big deal. This is all relative to everybody listening, but bigger relative to smaller being, maybe 5 to 10 versus 30 plus or whatever. Our experience is like the buyer pool for the 5 to 10 unit deal is such a diverse collection of individuals. You got the doctor who's going to self-manage it, and then you've got guys like me who are trying to raise funds to buy these, and then you've got the dude who bought a duplex to house hack and he moved out 5 years ago, and now he's going to sell. He's going to 1031 into the 7 unit deal or whatever because he's got a bunch of equity. So you have like so many different people and how they underwrite it, and one guy has got to underwrite property management because he's going to hire a PM. The other guy just doesn't because he's like, whatever, me and my buddy are going to manage it. And it's like you have a disproportionate amount of like people paying above what I would consider to be the right number. And then you have a disproportionate amount of people who are paying below because of some crazy seller motivation, because you get all different types of sellers, versus like a 30 unit deal where it's like most of the numbers are going to be like in a tighter range.
Absolutely.
And then debt only compounds that.
Absolutely.
So, and you work on both of those types of deals.
Like, I mean, for instance, just for a cap rate conversation, just sold 6 units in Milford, New Hampshire at the beginning of this year. And that traded at a 6.5 cap. Had some upside. There was some maintenance that need to be done, deferred maintenance that need to be done. But, that's a large scale deal that's trading, over $28 million, and it's a 6.5 cap. That investor pool is a whole lot different than the investor pool looking at even a 40 unit building. So as the deal size scales on dollars and units, it just becomes a different, like you said, underwriting's different, debt is different, buyer expectations are different, seller expectations are different. So it's an interesting conversation because a deal in the 5 to 10 unit range is still getting serviced the same as I would service a 106 units in Milford, but it's a very, very different process. It's sometimes almost more, I mean, a lot of the time you're more hands-on with the client who's buying the 6-unit or 8-unit building than you are with the client buying the 106-unit building.
Yeah. Yeah, because it's probably more, frankly, there's probably more education that's happening. Sure. So, and there's probably just more simple things that are being overlooked.
Yeah.
Versus the seasoned investor buying the 100+ unit deal who's got the mortgage broker, the attorney, the vendors helping with diligence. Like, it's a much more, oiled process there. Now, let's talk, I don't want to be the guy who asks you the question of like, what happens in New Hampshire a year from now or whatever, but like general talking points, right? You go into an office where you're working next to brokers who are doing deals in Massachusetts and in Maine and then down in Rhode Island. Yeah. So you're getting, whether it's through direct conversations or just osmosis in the office, commentary on how these other markets are performing and what's going on and all that. And I know there's a lot of back and forth conversations regarding, hey, I know your client's selling 10 units in Melrose. Do they want to buy 30 in New Hampshire and stuff like that? So general commentary around next 12 months into the, if we were sitting here this time next year, like general predictions around what's going to happen up in New Hampshire. Yeah. Are we going to continue seeing more demand? Are we going to see less demand? Are there kind of pivotal events that you're looking out for?
I think we're going to see even more demand. I think it's only growing. It's been growing. New Hampshire's not a new regional market by any means, but it is continuing to grow. We have, like you said, we have an awesome multifamily team that is territory based. So we sell all over the place in New England. And I have done a deal with almost everybody on our multifamily team because they have clients from whether it be the North Shore of Massachusetts or down on the Cape or down in Rhode Island that are looking up in New Hampshire for the reasons that we already touched on. I don't see that changing, especially with what's potentially happening in Massachusetts with the rent control initiative coming down the runway here.
Pipeline.
Yeah, exactly. So it's created a lot of interest in New Hampshire. I would say at this stage, there are more new buyers, but for the most part, it feels more educational on my end, where I'm having a lot of conversations with people that have never looked in New Hampshire, and they're expecting a higher yield than is the reality. They're expecting a cheaper, price per pound than the reality is. When they're, they own in Lowell or Lawrence, Massachusetts, and they look at a building that I'm selling in Nashua, for instance, and they're like, wait, I'm paying more for Nashua, New Hampshire. My cap rate's lower. My price per door is higher. It's like, yes, that is the reality.
Because the rents are the same and the tenant quality is the same, but the landlord-tenant laws are different.
Right? Landlord-tenant laws are different. There's not a potential statewide rent control proposal on the table. There's a lot of reasons that New Hampshire will continue to be strong. I don't see that slowing down. I think we're all very lucky to work in a state that's business friendly, and I do not see New Hampshire going backwards unless major legislative changes happen, which hopefully not, but
I'm gonna I'm not metaphorically knock on wood here so I don't mess the audio, but but I think that's the big fear for New Hampshire folks is like, and again, we're talking like local here, but like this applies to all regions throughout the US, where you have many regions in the country where you have non-landlord friendly states that border landlord friendly states, broadly speaking. And that's fundamentally the crux of everything we're talking about here. Like the city of Boston continues to grow and is a desirable place to live and has insanely diverse employment and high median incomes, all that stuff. And then you extend that into the greater Boston area, then a 30-40 minute drive of Boston, same thing.
Which I would consider Southern New Hampshire a submarket of Boston.
Exactly. Yeah. I mean, because you're 30 minutes away once you get up over the border. Yeah. So like that isn't the issue. It's purely legislative. Really, if we're going to boil it down in the short term, that's the issue. It's not like there's anything else that we're really talking about here. Right. Other than some some small things like there's no sales tax in New Hampshire, no income tax if you want to be a resident, all that. But it's the same dynamic at play, and I'm trying to, off the top of my head, think of like other states that are examples, but I'm sure many listeners are like, I live in a state that directly abuts a state where that's not the case. Like I have a friend who invests in Chicago because he lives in Chicago, but like now he's just trying to invest in Indiana, right? It's like the same exact exchange of risk, right? It's like, okay, we got more people here, but like we have far more legal protection in that state, and that's driving a lot of the demand drivers. So I think our folks who are more national or just not in New England, like we're talking about, it's the same. We're talking about fundamentally the same thing, and I don't think that trend goes in any other direction other than the way it is or has been the last couple of years.
Right.
Now let's talk about, obviously your work, and it's funny, we just touched on it. You're working with all different types of buyers.
Yeah.
Right? Like the buyer pool for the 5 to 10 is very different than the buyer pool for the 30 plus in terms of how you work with them and what that process looks like. But you're taking a deal out to market, and I'm sure you've got, regardless of what the deal is, a number of folks who are reaching out to you that maybe you haven't transacted with or haven't even had a conversation with.
Sure.
Talk about like the recurring clients that you've worked with, maybe some of the big bullet points of like, this is why I like working with them, or this is what I like to see in a buyer that I am working with or building a relationship with for the investors out there who are trying to get better at that.
Yeah. I mean, just to be clear, I'm a listing broker by trade. So, I want to control product. I want to bring assets to market.
And you fundamentally work for the seller too. That's like the other byproduct here. Yeah.
Correct. I would say that in at least our business in commercial real estate, a lot of the time, the listing broker will represent both sides. So I have relationships with, all people on, buyer and seller side. And a lot of sellers are buyers and a lot of buyers are sellers too. So a ton of overlap there. I would say to make a good seller, I'll start with that.
Yeah.
I would say the first thing is just transparency. If you're not, it's like, not to compare to a doctor. I'm not a doctor, but if you're lying to your doctor,
the stakes aren't as high.
You're not helping yourself. If you're lying to your broker or giving your broker bad information, you're only hurting yourself.
Yeah.
So I would say the first thing is just transparency. We're on the same team. We have the same goal. We're duly aligned. So transparency is important. I would say organization is very helpful when we get, and every seller's different in how they organize their, financials, all of that stuff. But organization is critical because especially in a market like today where you may only have 2 or 3 strong buyers at the table for an asset, you don't want to waste a bullet with a buyer if your information on your financials is inaccurate, and then you get into a due diligence period and okay, well now we have an issue, we're getting retraded, we're going back to market. Like that is how deals die.
Yeah.
So, accurate information, detailed information, and then communication is just important too. Hey, we had a unit go vacant. Hey, we had, the boiler went, or, we have to do this. There's an issue with the property. Just transparency throughout the process, communication throughout the process. And the other thing just on both sides is creativity. I think creativity in getting deals done is important and finding solutions, because a broker's job is truly just to be the shepherd of the transaction and get the transaction where it needs to go, which is to the closing. So being creative in ways to overcome challenges that happen throughout the deals. And, there's countless challenges that happen in every
I was just going to say, like, I think that there's probably someone listening like, what's an example of like solving a problem like while in the middle of a deal? Like, I don't know if bing bang couple hit your head, but
yeah, tons. I mean, I would say an issue that you hope doesn't happen, but you see it sometimes. I mean, say there's a phase 1 environmental done, and boop, you get a flag from the environmental vendor. Okay, we have a phase 1 environmental. They're requesting a phase 2. The lender is not going to provide the debt to the deal unless the phase 2 environmental is done. Okay. What we need to do is directly communicate with our seller why this popped, what the issue could be, what their liability could be if they actually have an issue and that phase 2 gets dug, so that they can make the most educated decision for them.
Yep.
And then if there's, delinquent tenants, okay, we have delinquent tenants in place. How are we solving this? Actually, a really good example of a deal I just did. I'm in the process. It's closing next week. It was a deal that had a student housing deal that had leases for next year that weren't in place. So there was actually some vacant units in place for the school year. They missed the leasing cycle for a variety of reasons. Okay, let's put together an escrow agreement to draw off as if those units are leased. If you're leasing them later in the process, obviously you pull that escrow money out, but it at least gives the lender and the buyer comfort to continue through the transaction. Yeah, it's short money overall in a large deal, and it got us to the it's getting us to the finish line. So I think that was an example. A couple examples there, but every deal is different. There's always going to be hurdles, and
it's funny just specifically too. And I'm kind of interrupting and sidetracking you from talking about what makes a good seller and what makes a good buyer, which I want to get back to that. Yeah. But I think just the process of embracing we can leave some money behind in escrow just is such a vague comment, but like that is usually such a nice roadmap into solving a lot of these different issues that still gets the deal closed. Doesn't delay whatever, satisfies the seller, and then we get it closed. At least I have the certainty that the deal's closed. Maybe I got to figure some things out or whatever, and then on the other side, maybe the buyer's trying to leave stuff with the, maybe leaving some loan proceeds behind, but they're getting it closed and they're not running into issues. Like that's usually something that I see newer investors not understand or embrace. Like there's the concept that everything has to be done when the deal is closed, period. And that's just like a mindset that I think it takes a while to get out of, right? And then there's the mindset too of, I think for a lot of sellers or buyers, where the baseline is I'm adversarial, I want to win, and whatever winning is defined as, usually it's like getting your way or not bending for some arbitrary reason other than you shouldn't, and I've always joked, it's like, I feel like a good broker to me is somebody who absorbs all the emotional 100%. Stress versus creates more. And like the more complex the deal, the bigger the deal. I think oftentimes that can happen. But you're not even bigger. I mean, it happens on all the deals.
It happens on every deal. I think managing that relationship with each client on the side that they're on, and like you said, kind of being the shield to a degree, where there's all different types of people in this business.
Could just do 45 minutes worth of this.
All different types of people in this business that you as a broker, you need to figure out how to transact with. Whether they're a friend, someone like you who I consider, someone I can talk to about whatever, or someone that, probably just wants to do the deal and, get off the phone. But it's making sure that they feel like they were treated fairly and what they're doing is towards the greater goal, and trying to keep people together on the path that we're on, because truly everyone's on the team to get to the closing. That's the goal of the transaction, is to make sure that, buyer, seller, leave the transaction happy in the fact that, okay, I disposed of an asset. I'm happy with the process that was ran. I think, everyone was on the same page. Maybe something didn't go exactly how I wanted it to, but I'm glad we found a solution to that. And then the buyer's excited to, acquire an asset to add to the portfolio and evolve that asset moving forward. And hopefully, feels like they were sold on an asset that they are understanding of and knowing of, and not something that, wasn't made aware to them, or something that, comes up post-closing and they're like, well, you never told me about this. Like that's no transaction, at least, and this is something I tell a lot of younger agents, no transaction is worth jeopardizing any portion of a relationship.
Yeah, for sure. I mean, because that's, you're winning short-term, losing long-term. And then when you're competing with the guys who are thinking long-term, you lose. And that's the fundamentals of the business too, right? It's just how it goes. I mean, it's the same thing with like being a buyer. It's like, maybe you like really rake that buyer over the coals when you're selling them a deal. But like, if you're going to be in the business for a long time and they're going to be in the business for a long time, your paths are inevitably going to meet in the future, which doesn't help anybody. So it's important to avoid that. But let's go back to, you were talking about what makes a good seller, like organization, transparency, all kind of the big things, reducing the likelihood that once you go under contract that something will pop up that complicates the deal. As a seller, the worst thing is you're taking it back to market. You've got to, you've lost the momentum, all that. Now, as a buyer, what do you like, when you're taking a deal out, reviewing offers, maybe even during like a walkthrough with a buyer, like what are some flags that are, or boxes that are getting checked? Like, this is somebody who's competent, who I would trust, referring to or recommending to the seller, all that.
And that's a huge point, because every deal, if it's competitive, right? Like we have buyer A, buyer B, I am going to make a recommendation if they have the exact same offer. Right. And I'll give them, okay, track record matters, who you are, what you own. Have I transacted with you? If I haven't transacted with you, can I get the opinion of someone I trust in the market who has done business with you? If you haven't done transactions, okay, do you have the money to do it? So I would say that, is the first step. I wouldn't.
These are like the big boxes. Like, you got to be able to buy it for sure.
Do what you say you're going to do is a huge one. Like if you say, hey, I'm doing the due diligence walkthrough, I'm just walking all the units with you and just reviewing financials, and then you show up with your roofer and your plumber and you're expecting to scope the sewer line and get up on the roof, and it's like, well, you didn't tell me this. Like be transparent again in, okay, this is what I'm doing during my due diligence period. I don't have a financing contingency, but that being said, I'm still using a lender. I will need an appraisal.
Yeah.
Like I'm doing these things, So, and a lot of that is screening on my end and just asking the right questions and what they're trying to actually accomplish. But yeah, being a good buyer is really doing what you say you're going to do and doing it in a timely manner too. Because managing your loan officer, making sure your maintenance tech shows up for the walkthrough if that's who's walking through it, making sure the appraisal comes through on time. Say you have a finance contingency that's set for June 30th and it's June 20th. I haven't got called by the appraiser yet. I'm like,
what are we doing here?
Do we order this? Like, what is going on? You're coming to the end of your contingency that protects you in the deal, and it doesn't feel like you're hitting the right, benchmarks time frame wise to get moving on this, which is the sign of a buyer who's either unorganized, maybe distracted, maybe has a lot going on, maybe they have a large real estate portfolio, or maybe it's their first deal and they're inexperienced, or first couple deals. So I think understanding the background and what they're doing and how they're looking at deals too is important, and listening, and the trust has to be there for me to recommend you. So do what you say you're going to do. If you tell me you're going to be, even the little things like show up for your tour on time. Like it's really that, okay, if you're 20 minutes late for your tour, the 5 times I tour you through, the 5 times I first meet you touring properties, are you going to be able to transact the way that you need to meet the expectations of a sophisticated seller, or a seller who is that way? That's a concern. So I think it's even comes down to little things.
Yeah, and speaking of the little things, like you're talking about like meeting deadlines in a contract and executing on what you say you're going to do in the context of like we're in the deal.
Yeah.
Let's say like even if we back up like before, like what are some of the things, like you're talking with somebody over, you're sending deals to somebody, they're giving you feedback, and you're spending 2-3 months, like maybe you tour it, and you're trying to get the sense early before they're even at the point of like, hey, I'm sending you an LOI and we're going to talk about a particular deal. What are some things that somebody can do to stand out?
Great question. Because everyone, it's classic. Send me the good deals. It's like, okay, I want value add. It's like, okay.
Yeah, nice, dude.
Trying to, because I'm trying to understand what you're actually looking for. Yep. Okay, if you're in the business, what are you looking for from a return standpoint? How much money do you want to put in the market? What kind of scale are you looking for? Will you only come to New Hampshire for 50 plus units, or are you looking at a 6-unit building? Are you a cash flow guy? Is it cash on cash return? Are you cap rate driven? Are you price per door? Understanding, okay, where are you looking? Oh, I'm looking in New Hampshire. Where? Yeah. It's a big state. What markets do you have in mind? And if they don't have markets in mind, I'm happy to speak to the markets that I'm, trading in, and markets that I like. But understanding where they're looking, what they're looking for in a deal, and how much money they're trying to put on the street is a basic starter. Because the guy who just goes, send me everything, I don't know what you're actually looking at and what makes a deal a good deal for you. So I think trying, for a buyer who's just starting out in the business, understanding what you are actually trying to accomplish and what you are actually trying to buy from unit count, money on the street, return metric, that's where you got to start, so that you can give me the feedback I need to put deals in front of you that actually makes sense for you, as opposed to me sending you 10 deals. You look through all 10 of them and you say, well, this guy, he doesn't have the deals I want. And then, maybe I grow frustrated too because I'm not getting any feedback from you. Yeah. And then it's like, okay, is this guy actually really an investor in the market? Like he's not really giving me anything back. Right.
Yeah. I think the quick and helpful feedback is probably a big part of this, right? I mean, feedback is probably, I'm sure you're like, at least you gave me some closure, you gave me some feedback. Sure. Hey, not for me, like price too high. But like, I think something that we try to do, and
you're very good at this,
is just providing like feedback with reasons. Yes. Like specifically like, hey, that area, these are the rents we get, and they're a little bit lower than maybe what, other people think they can get or whatever. Sure. And, for reasons X, Y, and Z, it's not going to be for us. Yeah. But I think that's another big thing too, is like, okay, so you're asking for deal flow from a broker, you get it, and then you're not further providing feedback above and beyond that. It's like, it's table stakes. It's like an easy opportunity for you to keep talking to the guy who's looking at all the deals.
Right.
Yeah. And then it's funny too, when you're talking about like being specific about like your criteria and what you're looking for. I had a young guy who just found me on Instagram, and he got my phone number and he called me up, and I was talking to him. He's actually a guy that lives in Southern Maine. He lives in Berwick, but he wants to buy real estate throughout the seacoast of New Hampshire.
Nice.
And I was like, well, what are you looking for? Because maybe we'll send you a small deal here and there if something doesn't work for us, whatever. And I've heard this so many times, and it's like I laugh every time I hear it because it means nothing. And I told him this, I give him all this direct feedback. He's like, yeah, we're looking for like 8 caps, like looking for 8 caps or looking for 10 caps or 9. And I'm like, well, dude, that means quite literally nothing because there's so many underlying variables there. So, you know, I'm sure you've probably gotten similar comments from buyers. Like, let's just, you know, and you did just touch on a lot of this stuff, so maybe this is repetitive, but like if you're getting a call from a buyer, like maybe, you know, even in your own words, like what do you want to hear? Not in terms of like, oh, this is a good buyer, but at least in terms of what really gives you the closure for financial metrics. Because I think that specifically is a component of, you know, I can tell you I'm looking in Manchester for 20 unit deals. Yeah. And then you ask me like, you know, what's the return expectations? And sometimes people have opinions on that, but the underlying assumptions are so out of whack. Yeah. Like, is there additional context there that's helpful for you?
Yeah, I think, you know, understanding how they're underwriting, understanding how I'm underwriting is important, obviously, right? Because everyone's going to underwrite differently. Yeah. You know, an 8 cap to you might be an 8.5 cap to me. Yeah. But I think
using management, are you like
exactly, that's what I was about to say. Are you self-managing? Are you using a management company? Okay, you know, who's the management company? What are they charging? How are you underwriting that? You know, what are you underwriting for R&M? What are you underwriting for reserves? When you say 8 cap, are you talking about where you stabilize this asset, or are you talking about where you walk in day one? You know, and it's difficult to transact with clients that don't give you that feedback. And you do a great job of it, and you do it quickly. So I think that's another thing. Timeliness is awesome too. Like I'm calling the guy back 3 times. Hey, do you want to tour this? Hey, do you want to tour this? Hey, do you want to tour this? Get nothing back. At that point, you know, I sent a guy 10 deals. He never got back to me on any of them.
Yeah. It must not be looking anymore.
Right. I'm less likely to follow up with that person in, you know, short term, because, you know, my deal flow at this point is pretty constant. So it's okay, this guy's not active. So yeah, I would say communication, timeliness, and giving reasoning is very important. And the behind the curtain stuff is what I love, because it helps me understand what you're actually trying to accomplish, how you're looking at these deals, so that I can hopefully better position assets that actually make sense for you, don't have you looking at deals that aren't for you and waste your time. And that feedback's critical to building a good relationship with any broker, I think.
Yeah, and I think, I mean, I always want to talk about the deals just because I want to know what the rents the other guys are getting, what the other stuff is selling for, and what the buyer demand is in that particular area, and all that stuff is really interesting to me. Like, as somebody who owns, you know, a portfolio and is running a management company and all that stuff, like, so for me, like, that is an opportunity to acquire intel, right, on what's going on.
Yeah, which is fine.
For any investor should be doing that,
100%.
Because it's a two-way back and forth.
That's the same thing on communication. Yeah. Hey, you know, Will, I'm not actually looking in Dover, New Hampshire right now. However, you know, I own in Newmarket, or I own in, you know, wherever, and I'm just trying to gauge what these 2-beds are going for. And that opens a whole new dialogue in, you know, okay, this is what I'm seeing for the market. You know, this is what I'm seeing for a type of renovation that can achieve the rent that you're trying to get. And that's valuable too. Okay, well, what is that reno costing you, Axel? And then I can get intel on, you know, what it costs you, what it costs, you know, person B, person C, and understand, okay, well, for Axel to do this reno, it's actually, you know, less or more. For John Doe to do the rental, you know, the renovation, it's actually a little less, and he's actually achieving a higher rent. So then I can give you that intel, and that's valuable to you. It's like, hey man, you might not actually need to go with that Hampton Bay cabinetry up there, because this guy down the street's actually getting a slightly higher rent than you, and he's got old, you know, 1975 wooden cabinets in there.
Yeah, and I think for a lot of the investors who are listening to this who do own buildings, like, when you're providing feedback, like, my opinion as the guy who's spoken to brokers over the years, it's like, provide the intel that makes their life maybe a little easier, gives them ammo to go and bring up to other folks, right? That's we just, you know, did X renovation and leased X unit in X town for X dollar amount. 100%. And maybe that's, you know, that's a piece of feedback on this particular deal, but just something to know in general. And
100%. And I get tons of intel from clients like yourself, and that's very valuable to me, because it allows me to have that knowledge of, okay, I'm selling in a market that may or may not have, you know, readily available comparables, comps to look at for sales or rentals or whatever. But I know just through word of mouth conversations, being on the phone all day, building these relationships. Okay, well, Axel's getting this for this layout, for this square foot, for that type of reno. It isn't on, a national platform where I can go pull that, but I know that through the conversations that I'm having. And that allows me to underwrite more accurately too, and then essentially price deals more accurately that will then go to market and trade in an expected range that was discussed with the seller. And that's, kind of that next level of just having those trusting relationships where you can share information with clients. And I try to be an open book with clients too, with what I can, and give them intel that helps their business. It's symbiotic. It works both ways, which is great.
100%. Well, I think we're coming up on time, man. Where can folks learn more about you, reach out to you?
Yeah, my phone number is probably the best place to get me. That's 207-712-6402 is my cell. My office line is 603-218-1857. I'm W Peck, P-E-C-K, at htapartments.com. Horvath and Tremblay, we service multifamily sales all over New England, all over DC, all over Florida, Chicago. And then we have triple net lease retail team that sells all over the country. And then a 1031 exchange desk. So if anyone out there who's in an active 1031 exchange looking to place their capital, we would be, thrilled to service that and hopefully, place the capital and not have you pay Uncle Sam.
Yeah. That's the Horvath guys are going to have to give you a steak dinner for that promo. That was very well delivered promo for H&T and all capacities.
I owe them a lot. I'm very lucky. I've had great mentors, Dennis Kelleher, John Pentord, Steve Girolamo, Spencer Norton. We have a phenomenal team. My brother Sam Peck, Sean McHale, Nick Bevilacqua, Ethan Lazar. We've got a wonderful team. Todd Tremblay and Bob Horvath do a great job on the retail team. So lucky to be where I am. Very, very thankful.
Love it. No, and I appreciate the time. We'll throw your number and email, all that fun stuff in the show notes. But yeah, if you're in New Hampshire and you're either looking to sell, buy, whatever, reach out to Will. Right? Yep. He's doing a whole bunch of deals. We didn't get into how many deals you're doing. I didn't give you a chance to plug that to maybe the level I should have. But that's
it's busy.
Busy is a good way to put it. But thanks again, man. This was
awesome.
Great.
Appreciate it, man.